We begin with a progress report on the world's two largest economies, China and the United States. Federal employees in the U.S. returned to work. Flight cancellations and delays could last for another week, but there are already improvements at most airports. China reports its economy is showing signs of resilience with new economic data released on Friday, including retail sales, industrial production and investment. CGTN's Wang Mingji reports from Beijing.
Stable with a sustained steady progress. This is a message from China's national economy in October.
Production and supply grew steadily, employment was generally stable, the price situation improved, and new growth drivers were cultivated and expanded.
As a main gauge of inflation, China's CPI, or Consumer Price Index, was up 0.2% year-on-year in October. The core CPI, which excludes food and energy prices, reached the highest level since March 2024, with an increase of 1.2% year-on-year. China's CPI increase was mainly due to a boost in spending during the National Day holiday and Mid-Autumn Festival, which coincided this year, adding that consumer and travel demand both surged, reflected in a rise of 8.6% in hotel accommodation prices during the holiday period. China saw further signs of improvement in economic performance as a decline in PPI, or Producer Price Index, continued to narrow for a third consecutive month. China's industrial output was up 4.9% in October. The service sector recorded sound growth momentum with index of services production up 4.6% year-on-year, as China's economy continued to face internal and external challenges.
There are many unstable and uncertain factors in the external environment. Domestic structural adjustments face significant pressure, and stable economic development is faced with multiple challenges.
Despite the challenges, Fu says China's economic performance remains strong, supported by the efficient government policies. He says it will further deepen reform and opening up to promote high-quality economic growth and increase economic output in the future. Wang Mengjie, CGTN, Beijing.
More now on the Chinese and U.S. economies. Let's bring in our panel. Joining us from New Jersey is Qiang. He's a former chief economist for JPMorgan Chase & Company. Here in the studio, John Tamny is the president of Parkview Institute and editor of Real Clear Markets. Also with us from Oregon is Liang. She's a chair professor of economics at Willamette University. And Qiang is the assistant director of the International Monetary Institute. He joins us from Beijing. Thanks, everyone, for being with us. Qiang, China released key economic data on Friday. This includes retail sales numbers. These figures beat expectations. That's the retail sales numbers. There was 2.9% year-on-year growth. So what does this tell you about the Chinese economy right now?
Well, Anand, I think this is a very clear message about how China is reshaping its economic structure, try to elevate, all the structures in the national economy. I think for the consumptions, yes, I think we do have very strong numbers on the consumptions, even though we are just going through a very long vacation, months, and also given the international backdrop is very turbulent, but we've been seeing that the tourism market is good and the hospitality industry is good, catering industry is good, education, culture spendings are good. So I think China is one more, turning into a middle-high income nations when its GDP per capita is more than $13,000 US. So the 50% of the GDP share is going to be more than 50% of the GDP share is going to be on the service industries, culture spendings, and etc. So I think this route and this trend has already been very clear. But we have already, but also we've been seeing that some basic productions is not within our expectations. However, we've been seeing that the high technology spendings and the numbers are also very good,
right.
Like the tech-savvy industries, like the digitalization, like green energies, and all that has been growing at a double-digit speed. So I think right now we've been going through this kind of the turbulent point of the moment when China is trying very, very hard to, elevate its structure and also counterfight, the international backdrops, international, turbulence.
Okay. Qiang, I mean, that's the good news, but where do you see the biggest challenges for China, challenges to hitting that target growth rate of 5%?
Oh, yes. I do think we still have some difficulties ahead of us. I think the very important thing we need to follow up closely is about the housing market, because we're still seeing more than 10% of the slowing down in this, aspect. Well, everybody knows the wealth effect. Well, the prospect of the wealth is actually one of the very important determinants decide people's confidence in the spending. So how we can continue with the trend of this spending? People would like to go out. People would like to spend the more of the money on the education, on the healthcare. I think besides the government's the prop up and also subsidies, I think a more important thing is that people are seeing their housing and their largest assets portfolio in the Chinese family are bouncing back. So by that moment, I think we're going to see a very firm and strong comeback of our economy. But I do think the capital market is really believing this trend has already. If you see the Chinese stock market has been going on more than 4,000 points already. This has been, for a very, very long time. We didn't go back to the 4,000 points. So I think the whole market is trading on the rate inflation and to grow back, is kind of a logic already.
Right. Liang, there's been a very sharp focus on consumer spending as a key driver of growth. In fact, we saw in the month of October sales of new energy vehicles surpassed the 50% mark. That's for the first time. China did introduce these trade-in incentives. To what extent has that been driving growth?
Yeah, good to be with you, Anna, and the panelists. So I think we saw this October number for retail sales that's gone up by 2.9%, which is slightly weaker than the previous 9 months at 4.3% of growth rate. We're also seeing fixed asset investment that has actually declined by 1.7%, which is acceleration of the decline back in the first 9 months. But I think October is a month where there are a lot of challenges, right? There was the trade tension, as you remember, that's before the trade truce, the tariff truce. Then you have the anti-involution campaign that I think disincentivized some of the manufacturing investments. Then you also have the high base effect from last October. So I think these numbers, even though it shows some deceleration of the economy in October, but I think it's still quite resilient. And I also think that this 1 month data probably not going to tell the trend. Now, going back to your question, I think what we're seeing here is not only an expansion in consumption thanks to some of these trading programs, but we're also really seeing a sort of structural upgrade on people's consumption. So as you mentioned, and we also see this in the November Double 11 festival numbers that most of the growth, especially are in electronics, digital devices, and also home appliances and some apparel increase. So all of these just show that people are searching for high-value products, more tech products, and also a lot of service consumption as well. So I think we're seeing more sustainable and steady growth in consumption as well as a consumption upgrade. And I agree with Qiang. I think right now the real estate remains to be a drag. The investment has gone down by 14.7%, again accelerated from the decline back in September. And we see home prices, both new and old, have declined month on month. So if the market can be more stabilized and with all more consumption support, I think we're likely to see the consumption market rebound even more so coming in 2026.
Anthony Chan, the longest shutdown in U.S. history is over. The United States government has reopened, but we are already hearing about some of the consequences. In fact, we will not know key data like jobs numbers or inflation numbers for the month of October. That's because of staffing issues during the shutdown. We will get data for September, I understand. But without this kind of important information, I mean, how will it affect decisions that have to be made by the Federal Reserve and by other key government bodies?
Well, Anan, you're correct. It's going to be a little bit more of a challenge. The good news, Anan, is that we have alternative data. So we have ADP. Now ADP has a new report that comes out on a weekly basis that gives us the 4-week moving average of jobs and things like that. And we have some alternative data with regard to initial unemployment claims. So we're not completely in the dark. There's home base. There's a whole slew of employment data that the policymakers can use to assess how the labor market is doing. And so far, if you look at all of them, and again, we probably don't have enough time to go through each one of them, but if you look at all of them, it basically is telling you that the labor market is much softer than it was at the beginning of the year. That's not a big surprise. And of course, real GDP is going to slow down. We know that real GDP contracted in the first quarter, 0.6%, but then it grew at 3.8% in the second quarter. And the third quarter, which was really before the shutdown, probably grew something close to 4%. But now and on, with the effects of the shutdown, you're probably going to get growth below 0.5% in the fourth quarter, which means that for the year, you're going to grow below 2%. Maybe we'll grow around 1.8, 1.9%. So it's kind of funny that we're worried about China not growing at 5%, and we're not even growing at 2.5%. And I was just in China about 3 days ago, and one of the things that I enjoyed is that the prices are a little bit lower. They're not rising as fast as they are here. And I saw a lot of the restaurants kind of busy and people going and in hotels because, again, the prices are right. It's not booming, but it certainly didn't seem to me like it was collapsing when I was in China.
John Tamny, great to have you with us in the studio. One of the other consequences of the shutdown was air traffic, travel. It caused major flight cuts across the country. That's because of the reduced number of air traffic controllers at airports around the country. But air travel is starting to stabilize. According to FlightAware, almost 1,000 flights were cancelled on Thursday, but that is down from 2,400 on Monday. But how much of a financial setback will this be for the airline industry?
Well, they're used to it to some degree because there's always something that's intervening here, but it cannot be stressed enough that an economy as sophisticated and dynamic as the U.S., when you enter these sort of artificial things that actually slow it down, that limit the ability to people to move around, it takes a while to rebuild. What's incredibly sophisticated can't be rebuilt overnight, and that's why they're saying right now that it's not going to be tomorrow or the next day that we get back on track. It's going to take some time.
But looking at the broader impact of the shutdown on the U.S. economy, there's been a statement which was made by Kevin Hassett. He is director of the National Economic Council. Let's listen to some of what he had to say.
Our Council of Economic Advisors said that it cost about $15 billion a week, and it accumulates to maybe 1.5% of GDP when you account for multiplier effects. And their current estimate is that 60,000 Americans, not government workers, have lost their jobs because of the reduced economic output.
So it's not going to be fixed overnight, but how does the U.S. rebound from this?
Well, I think what you're hearing right there speaks to the major demerits of GDP in the first place. Mm-hmm. Government spending is an effect of economic growth. It does not drive it. To say that it drives economic growth is the kind of accounting that gets people fired because you're double counting what already happened. Mm-hmm. And so for Kevin Hassett to say that there's a multiplicative effect of taking money from the pockets of private sector workers, cycling it through Washington, giving it to other people, and then them spending it, ignores that someone had to be taken from first. And so I don't think there's any major growth slowdown from this. And then, as Anthony Chan points out, all these numbers that people are saying, oh, suddenly the Fed's blind and we won't know what to do. Oh, come on. ADP has been tracking unemployment far more accurately for decades than what the BLS does. Mm-hmm. And if you look at most economic figures, they're already produced in the private sector in the first place. So I think a lot of this is people talking their own book in Washington.
Right. Anthony, to John's point, the Associated Press report says the shutdown will weigh heavily on the U.S. economy, which it points out is already under stress. Federal workers, of course, are back at work, but canceled flights will not be rebooked. Canceled restaurant reservations are not going to be made again. And given inflation pressures as well as sluggish hiring, what will the effect be?
Well, the effect is usually when you open up the economy, you make up a lot of that lost economic output back, but you're correct.
Oh, we've lost Anthony. We'll try to get back to him. Let me go to Qiang. Qiang, on Monday, the United States halved fentanyl-linked tariffs on Chinese imports to 10%. It also extended the reciprocal tariff rate from 34% to 10%, and in return, China rolled back those export restrictions on rare earth minerals, materials, all part of that deal that was struck by President Xi Jinping and President Donald Trump in South Korea not so long ago. But thing is, do you think that this truce, this agreement is durable? Is it going to last?
Well, I think this is a great point. First of all, I think we do have made some solid progress, that's for sure. I think for the Madrid round to the South Korea round, I think from the high level, the technocrat to the leadership, I think both agreed that we have to ring fence all those kinds of trade related, issues out of the politics, scenario. And also, China and America do need each other. Hard decoupling is not going to happen because that's going to be the disaster for not only China and America, but also for the rest of the world. I think that's a reason why we've been signing all this kind of the agreement with each other. So the rare earths is not going to be the problem, at least for now. And also the trade tariffs is going to be lowered. But yes, you do have a point that is that going to be durable? For me, for the short term, maybe in a year or several months, or 14 months or 16 months, that's going to be durable. But if we're going to talking for a longer term, I don't think we're going to be that kind of the smoothie, forever. We're still going to see many of the turbulence going to happen in the year, in probably 16 months or even 2 years to come, because currently, as just Anthony has been mentioning, we've been seeing a lot of the jobless situation happening in America. And as more of the job has been bleeding out, I think the scar effect is going to be there, and which means you're going to have a lots of blood pressure. You're going to blow up the steam to the outside, and the China, European Union, Japanese market, South Korea, and all this economic heavyweight is going to take, a lot of kind of pressures released by America. So as the domestic situation going worse, the projection of the domestic problems is going to be more and more on the outside. So I think, yes, I agree that this kind of the trade issues, this kind of truce can be very fragile, and we're going to see more of the things coming up in probably 2 years.
Okay, Anthony Chan is back with us. Anthony, you were telling us about some of the impact that the shutdown could have on the U.S. economy.
Yes, the impact, some of the things will not be made of, but generally in the first quarter, I do expect a bounce back in economic activity. But one thing that hasn't been mentioned so far is that we have a situation where we have a K-shaped recovery, a K-shaped economy. The top 10% of the population now accounts for 49% of all the consumer spending out there. And guess what, Anand? The top 25% of earners are now seeing their wages rising at 4.6%, while the lowest are seeing their wages rising at 3.6%, so much slower. So this is different from during the pandemic, when the lower strata, or the lower 25%, were making more than the top. And that's part of the reason why the economy is slowing down. And that's independent of whether you close the government or not. So yes, the government is going to slow down economic growth. Some of it will be made up, not all of it, but that disparity between the higher income and the lower income is also going to be weighing down on the U.S. economy.
Liang, talking about that agreement that was struck in South Korea between China and the United States, it was an agreement in principle. The details were not announced. The United States and China, in fact, are still negotiating over the key details of how Beijing will free up those rare earth exports to the United States. Bloomberg reports that the two sides have set a deadline of the end of November, just a few weeks away, to agree terms. What's at stake here?
Well, I think the stake is high. We know this truce is really just a temporary, I would say, stability. But there are a lot of structural differences and disagreements need to be worked out. The rare earth export control is one of them. And I think China is developing the so-called end user verification to make sure that there is a fast track for export for these rare earths for non-dual uses or non-military uses for the U.S. companies. And at the same time, I think both sides, of course, still have these sticky issues about these tech export controls from the United States. And so I think it will take much longer time for both sides to work out some kinds of deals. And of course, we'd like to see that the two leaders meet again in person next year, hopefully, once in China, once in the United States. And so I think it would take a lot more for both sides to come up with some kinds of agreements to resolve some of these difficult issues. And now I think for the United States, again, I think the economy with the end of the shutdown would also bring back some temporary stability. But let's not forget, this is not done yet, right? That we still have these tensions about, the ACA in terms of the subsidies. So I think, and some of the spending, as you just mentioned, that are foregone would not come back. So I do think that this is quite severe, and it has, the long-term implications when it comes to uncertainty and so on and so forth, weighing on the U.S. economy.
Yeah. John, let's talk about tariffs. I mean, these are things that have been going back and forth over the past few months. Now, the U.S. Trade Representative Jamieson Greer said on Friday that the Trump administration is preparing tariff exemptions on food imports. This is about 100 items. It includes things like beef, coffee, bananas, cocoa. How significant is that? Because food, of course, is very important. And the food inflation rate, which was measured at the end of August, the year-on-year inflation rate was 3.2%.
Well, it's important in the sense that it's a symbol of what's true.
Yeah.
The administration will not admit it, but it desperately needs to get out from around these tariffs. Tariffs are injurious for the American people. If the only negotiation from Donald Trump should have been, we're going to zero unless the rest of the world follows us, they will fall further behind from us. And so I think what people inside the Trump administration are secretly hoping is that the Supreme Court saves Trump from all this. He has to save face by creating exemptions, by slapping a tariff here, removing one here. But if Donald Trump wants growth, the tariffs have to go away. If he wants slower growth in a less evolved stock market, he will keep it here. But again, I think the Supreme Court is going to save them from what is always damaging to the country. If you want to be rich, you open up your markets.
What about the fact that the U.S. Treasury collected something like $195 billion from tariffs? President Trump says he wants to distribute some of those in the way of checks to different households, $2,000 per household. The Treasury Secretary, Scott Bessent, has previously said that the tariff income should be used to pay down the debt. So what's it going to be?
Oh, it's not going to be either. I mean, there's this myth out there that that spending cuts actually lead to reduced government. They do not. The money is just shifted. If they hand it out, they're not going to hand it out because hopefully these tariffs are going to be reversed in the first place. This is a lot of talk. President Trump cannot give out money. Congress would have to vote that. They're not going to vote it. I also don't think there's going to be some big paying down the debt ceremony. And let's be real, $195 billion is a drop in the bucket relative to what's owed. No one cares. This is all political stagecraft.
Right. Anthony Chan, can the United States Supreme Court save Donald Trump on the question of tariffs? I mean, it might rule that these tariffs are not legal because the White House, the executive, doesn't have that privilege of raising revenue. That's the duty of the United States Congress. But he has ways around it, doesn't he?
Yes, he has many ways around it. He has Section 122, Section 301, Section 232, and Section 201. Now, a lot of these come with constraints, but those are ways to get around the tariffs. But yes, I agree. The president has an affordability problem, and that's why he's thinking about exempting some products from the tariffs, because there's a problem out there that K-shaped recovery is hurting. And as Yang Liang has indicated, those subsidies are going to be a problem because guess who's impacted most by those subsidies? That lower 20 or 25% of the population, even the lower 30%. And that's where the affordability problem is. So as those subsidies disappear, that problem becomes even more severe. That's the reason why the tariffs are a real severe problem for the president.
Qiang, let's get back to China. China's new 5-year plan, which was discussed just a few weeks ago, includes high-quality green development and innovation. In October, looking at the figures there, high-tech manufacturing reported a 7.2% increase, and equipment manufacturing expanded by 8%. Could you give us a sense of how important these sectors are for Chinese growth?
Well, Anand, I have to understand if an economy actually is going to get out of the middle income trap. So very important thing is that they have to seize the commanding head of economy, which means they have to have one or two or several like pillar economic sectors, very high technology, very high value added. Like in America, you got Meta, you got Microsoft, you got all kinds of AI companies like the OpenAI. And that's been supporting America to be the #1 economy of the whole world. Similarly, when Japan rise up, when South Korea rise up, they all have their iconic, companies and technologies in the whole world. So China was like to follow suit like that. So that's the reason why we've been having our revolution on this kind of the latest technology, like the green energy, like AI. This has been kind of helping China, a country with 1.4 billion population, to seize at least some of the footing in the world economy. That's for sure. And also, China is facing its pressure, on many, challenges like the aging population, like all this kind of the social welfare problems. So I think the AI and also green energy is probably most important, solution we can find right now. For example, how are you going to help all these senior citizens? How are you going to help all those, patients in the hospitals, take care of them, and also to mend up, the social security issues. I think in the green energies and AI probably is going to be the key, because green energy will power up the AI, and the AI is going to consume lots of the energies. But the green energies, like more you use it, the marginal cost is getting lower to probably near zero, and that makes a perfect, circle, a very banal circle to solve up all the things. Because if you take a look at the current training cost for the AI in America, basically one AI, a large language model, is going to consume one county's, energy consumption for the whole year. And that is in the developed nations like China and America we're talking about. It's not going to happen in some, lesser countries with the energy, smaller energy sectors. So I think China is going to solve the problems in the next 5 or 10 years, in the longer, in the 15 years to the year of the 2050. So I think that's the reason why we've been embedded this kind of the development into Chinese next 5 years development plan, and it's going to last for the longer moment than we can expect.
Okay, Liang, I've got 30 seconds. One big, broad question for you. We're rapidly approaching the end of the year. Is China going to meet that 5% target?
I believe so. I think they're giving very strong growth in the first 3 quarters, 5.2%, and then I think the last 2 months with the tariff truce and also anti-involution campaign receiving some positive results. I do believe that the economy is able to round up with the close to 5% target.
Okay, and that is where we have to leave it. Thanks to all of you for being with us. That is it for this edition of The Heat. I'm Anand Naidu in Washington. Have a great weekend.